What is up, you guys? Welcome back to Invest. Today I'm going to talk about a couple of news stories that are coming out, and I think it's really important. So, first off, Trump says 25% tariffs on goods in Mexico and Canada, kicking in on March 4th, and also that he's doubling the existing 10% tariffs on China. This is pretty, pretty big news. This is going to be kind of scary going forward, because one thing that we previously talked about with, the raising of the interest rates on the from the Fed was that it was meant to clamp down on inflation. And one of the problems with tariffs is that it almost by definition increases inflation. You're raising the prices of things for the simple fact that you're trying to bring manufacturing back to the United States. In some ways it makes sense, in some ways it doesn't. When you're doing vast, widespread tariffs like this, what you're doing is you're just raising inflation and not actually doing anything for the United States, because you're not targeting it. You gotta target this. Some things are better off made in China. Some things are better off made in Mexico. Some things are better off made in Canada. It's simple to recognize that China has way more population. They have more manufacturing capacity. We should be targeting things that are more profitable in order to capitalize on our advantages, being better educated, having more technology. It doesn't make a lot of sense to do these widespread tariffs. So one of the big problems that is coming forward is that we've got these tariffs. Is probably an increased inflation. Is the Fed going to react, or are they just going to hold steady? I am fairly certain that they're going to hold steady. I wouldn't expect them to go back to raising rates in order to bring this inflation down. But we are running into some, serious forward-looking problems. Another article that I've got pulled up here, if I can get on the right tab, is jobless claims are spiking. This is, a big problem, because obviously if you're raising the prices on things and you're also getting people out of the job market, you're suddenly running into a situation where you've got a lot of people that are out of jobs and they can't afford the higher prices that you're charging on stuff. Now, hopefully these tariffs work out, manufacturing jobs come back, and the jobless claims spike comes back down because of the manufacturing move back. But there's no promise of that happening. There's no indication that that's actually what's going to happen. And even if that does, even if you do end up bringing manufacturing back, it takes time to ramp up. It's not going to be overnight. Another thing that we're looking at is pending home sales, lowest level on record since January, lowest level on record in January. This is a big problem, because, if people are moving, they're not going around in the job market, the housing market. The housing market is not a thing that you want to see drop. You don't want another 2008 scenario where the housing market crashed and everything else crashed along with it. Hopefully the changes that were done under Obama would hold up, but as far as I'm aware, a lot of that stuff got rolled back or has been not very well implemented. So you're running into a situation where suddenly inflation's going to start going back up. Jobless claims are starting to spike, which is, we talked about it in our video yesterday, midday update, where the summer was violated back in November. It could be violated again, because jobless claims going through the roof is not something you want to see. So, yeah, the near-term outlook is kind of like neutral. But the long-term outlook for the rest of this year is pretty bearish. If I were you, and if I were me, what we're doing right now is really reducing our leveraged positions. We're reducing those down. We're going back to just unleveraged positions. And then we're hopefully going to see the market downturn and then use the downturn as a buying opportunity. We probably won't do more widespread buying until much later on in the year. Typically recessions last 6 to 8 months. So we're going to be, probably, let's say the recession starts in a month, or if, the stock market does not recover from this recent drop, we're really wanting to buy that dip later on. But, 2 months from now, if it starts in 2 months, and then another 6 months on top of that, you're looking at probably October, November, that the market would bottom out and hopefully start recovering. It's a long time. And, I would say one thing is good for Trump is that it's happening right at the beginning of his presidency. Because, one of the things that happened in his last presidency is one of the first things he did, his biggest achievement was doing a lot of tax breaks specifically for the rich people. And those tax breaks, they were very unpopular at the time, but by the end of his presidency, everybody had forgotten that he did that. And he was able to write a relatively fund public relations campaign in his re-election campaign. This time around, he's, obviously doing something that's going to be very unpopular because people are already struggling with the egg prices. People are already struggling with housing prices being through the fucking roof and they can't afford shit. If he plays his cards right, people might end up just forgetting that he had a stock market crash at the beginning of his second term. That could bode well for him. I would still say it's probably going to be a negative, especially in the near term. But if he manages to pull it off, people could look back at it fondly and be like, well, he did say that there would be some pain in his second term because he has to fix America. That's something that could definitely happen. So we're going to keep an eye on this. Like I said, we're going to slowly ramp down our leveraged positions, slowly just go back to unleveraged, and hopefully about a dip. But things are not looking good in the for the latter half of this year. Let's just say it that way. So if you like this content, feel free to like, subscribe. We're trying to build a channel up. Obviously, we're a very new channel. We're not getting very many views on our stuff. I'm not a particularly good public speaker. Working on it. It's definitely a work in progress. I am a software engineer by trade. I do not like public speaking, but I'm doing this because I feel like I've got knowledge that I would like to share and people can benefit from it. So feel free. Hopefully, we can make this channel a lot better in the future. I know I say liking them a lot. We're going to try to cut that down. Hopefully, cut it down a little bit in this video. So, thanks for watching.